Hello there. This is your boy again with another video on trading. I'm still with my favorite instrument, volatility 25. If you're new to this channel, welcome. I'll call you to hit that like button and the subscribe button and leave a comment in the comment section below to let us know what you think about the video and to also help with the YouTube algorithm to make this video to be suggested to other people. Okay, so I just took a trade right now. I took this trade here. And I'm a scalper. Today I was scalping and I took this trade and I got about 20 units from this trade. Now basically, why did I take this trade, or what was the motivation? Okay, so as you can see, my chart always has a few indicators. I don't use too many. I use just key indicators like the Bollinger Bands, which I explained always in my videos. I will not go back to it again. I use the exponential moving average, that will be the 20 moving average, 50 moving average, the red line, and the yellow line will be the 200 moving average, and the market is still going up crazy. Now, what made me to take this buy? Now, to begin with, if you go to, let me go quickly here to the 15 minutes time frame. Now, when I came to this time frame here, I could literally see the market in an Elliott wave mode. Clearly you could see if I go to let me see the 10-minute frame here. So the 10-minute frame clearly showed us that the market was in Elliott wave mode. So you can see the Elliott wave begins from here. So I'm going to quickly draw Elliott wave here on the 10-minute frame. This is the first wave, or wave 1, and this is wave 2. And then after wave 2 we had wave 3. Wave 3 ends up there, and then we have Elliott wave 4. Elliott wave 4 ends here. Elliott wave 4 just grazes the area of wave 1. It doesn't cross into the area of wave 1. And I could see Elliott wave 5 already preparing to form, telling me that the last wave is about to form. And after that you will have waves, corrective waves A. Let me change the color to black there. You would have corrective wave B, and the last corrective wave C is going to be a deeper dive right here. Okay, now, so when I saw this trade, I saw the Elliott waves. The next thing I was looking for after the Elliott waves, if I go up to the 30-minute time frame again there, let's just be sure that we have our Elliott waves correctly. So you can see that the Elliott wave is even clearer here on the 30-minute frame. It's so clear here. So you have wave 1, wave 2, wave 3, wave 4, and wave 5. Wave 5 can either break the top of wave 3 here, or wave 5 can be a truncated wave which will end somewhere here. It all depends. But now I'm a scalper, so I step in very quickly, I get a few candles, and I get the hell out. Okay, so now I also use divergence. Divergence is a great tool. Looking at my RSI, I use the RSI for divergence. So I'm going to, let me shift this down a little bit. So if I look at my 10-minute frame here, you can see that there was some divergence. Let's start with the 5-minute frame. Let's go to the 5-minute frame. So here you can see there was some divergence here. Look at this market here on the 5-minute frame. Okay, so what do you see? You see the market here was coming down, as you can see here. I'm going to put an arrow. From this point to this point is lower. I'll make the arrow to be, I don't know, purple and a bit large so you can see the arrow clearly. Okay, so from this point in the market to this point, the market was coming down. But here on the indicator, the market rather went upwards. Let me shift it to the left so you can see. Okay, so you see what happened here. Look at the same point here. This is the same point on the price chart. Look at the same point on the oscillator here, on the momentum indicator here. It was selling here, but the indicator is showing us that the sellers are losing momentum. They're losing interest in the market. As you can see here, the market is rather, the oscillator is rather rising. This is what we call hidden bullish divergence. We call this hidden bullish divergence, and this tells you that the market is also about to rise. And then I could see the market very quickly here. It formed a double bottom here. So it did this, it went up, And I was looking closely for this bottom here, and you can see that that bottom there did not take out. It did not take out the previous bottom. So the second bottom was not very low. It wasn't lower than this one. That was a perfect double bottom. And generally after double bottom, the market flies off like that. And so that's now the divergence didn't just appear on the 5-minute frame. Let's go to the 10-minute frame and confirm again. The divergence can also be seen on another frame. So that's how you make sure that you have all the parameters in your favor. So here again, if you can see here clearly, this point on the market is higher than this point on the market. But on the 10 minutes frame on the oscillator, look at the oscillator, the market is rising. The indicator is rising while the market or the price is falling up here. Again, this is hidden bullish divergence. And so when I saw the hidden bullish divergence on two indicators, that was my cue. That was my cue that the market was about to rise. And now I had to go in here and look for a way to draw my pennant. Now, what's a pennant? A pennant is a triangle. Once you learn to draw pennant, as you can see, this is my pennant here. I'm going to make my pennant really bold here. I'm going to make this other pennant also bolder here. So once you learn to draw your pennants, you're good to go. So with these pennants, the market was in this area, this pressure build-up area. A pennant simply encloses an area where buyers and sellers are locked in a heavy battle. And in there, you can see the fight. That's a pennant. So once I saw that, I knew, okay, this is it. This is it. And so once the market broke out of the pennant, the market was breaking out with high pressure. So this is a high pressure area. Once it breaks out the pennant in a certain direction, there's high pressure. So I took my buy trade right there. So there was a confluence of factors. I'm a confluence trader. Confluence means that you need to be able to look out for many factors in your favor. You're not just looking out for one thing, you're looking out for many factors. I had my RSI divergence, I had my Elliott waves, I had my double bottom. I also had a confluence of factors in my favor. Okay, so I hope this helps you a little bit, improves your trading too. As you can see, I'm in the market and we are doing just fine. Let me know what you think about this trade in the comment section.